A Monday morning, we had Kenny Glick on, and he was talking about perhaps a generational low on Friday. Well, you had another look at that generational low yesterday morning off the open, and if you were in the STN room, you would have heard it called out. Bank of America up almost $3. ASML igniting the chips. What else do we need? It's a rally on Wall Street. Blu Putnam, 835. No, he won't discuss the CPI. He's going to talk about tariffs. Put together one heck of a presentation. We're fired up on this Wednesday. Pre-market prep starts now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, we had a little bit of a soybean sell-off near the close, tongue-in-cheek, and they bought that, started buying at 6 p.m. We're up 44 handles at 67.30. The buck pulling back after topping out here just over 99. TLT in the green by 16 cents, 91.02. USO flat 69.09. GLD no stopping it, up another 5.5, 386.30. SLV up over a buck at over 48. Bitcoin. Should be worried about Bitcoin. We'll talk about that with Dennis when he comes down. Bitcoin down $660, right around the 112,400 level. Let's bring it on Triple D. Triple D. We got to discuss everyone's the taco trade. Well,
Yeah.
we don't want to just, we got to be new and creative here, right? So I did the Trump two-step, and Brentster, he gives me the approval on it, and that's what it is. Hard on China? She's my buddy. Gee, we're going to lunch, man. We're compatible. Back and forth, back and forth, back and forth. The Trump two-step. That's my new saying.
I mean, it's right. It's a good saying. Two-step, whatever you want to call it, he's there. He says something. He changes his mind the next day. Then he's going tough. Then he's going soft. Then he's going tough. Then he's going soft. He just goes back and forth, back and forth, back and forth. And the market listened for about a minute on Friday, and then they realized, no, the Trump two-step still exists. And he two-stepped it right on to Sunday, where, we step forward, step back, step forward, and step back. So obviously the Sunday night rally happened. And then we got a little bit nervous with China talking a little bit tougher on Tuesday, and we sold off again. And now, we just rally right back. So, I mean, buy the dip just works eternally. We talked about this in the STN room when we were approaching Friday's lows. We're like, if we're going to bounce, it's going to be here because this is the spot. Both me and you were pretty convicted on that spot. We not only bounced, I said we could possibly get part of the losses. I did not think we were going to go green after being down that many handles, but we did. We went green, sold off a little bit at the end of the day, and then we just buy them back overnight here again. So the only fear out there again is the fear of missing out. Friday's sell-off is completely forgotten except for those 1.7 million crypto traders who blew out. But that's where we're at. This market is just relentlessly buying the dip, and it doesn't care about valuation. It cares about a sexy story, and it wants to go to the moon.
Moonshot. Well, you know what else helped out yesterday?
What's that?
Pumping Powell.
He was pumping.
He was pumping. He doesn't like to see his portfolio go down. Central bank is nearing a point.
I didn't even listen to what he said. What did he say?
He said the central bank is nearing a point where it will stop reducing the size of its bond holdings, okay? But gave no longer an indication where rates are heading. Though the balance sheets are in the weeds for much, they matter to the financial markets. We're going to stick to the recent script on the economy and interest rates that policymakers are concerned with is the labor market. The labor market. So if you're worried about the labor market, what do? You lower rates. And that hit the tape midday. And as you can see,
and that was the catalyst for the rally as well.
Yes.
So it wasn't just the Trump two-step. It was a little bit of the two-step from Powell. He's went from tough on inflation to like, I value my job and I want to actually not get fired. So I'm going to lower rates probably because I'm basically being forced to.
It's
where we're at.
It's the old rule of the Trump two-step and the pump and Powell. I mean, what more could you ask for in this?
It lines up for a bull market. How do you fight the Fed? How do you fight the Trump? That's where we're at in this market here. It's hard to fight either of those. And just to like expand on this, market here, which is a full FOMO here. Yesterday, and thanks to Epic Trades for pointing this out for me. I did not see this. David Prince, who was on the show yesterday. Thanks, David. 5 times single stock ETFs filed by volatility shares. They are looking for the 5 times AMD, the 5 times Amazon, the 5 times coin. If you want, you can find the list there, Brentster. We bring Brentster in here to this whole conversation here because I like having the Brentster.
Good morning.
Always digging for us in the background, always finding the news. Dig. Obviously, looking here, if you go to my Twitter feed, I just retweeted this, and you'll see the David Prince tweet. We'll see if you can hunt it down here while I'm just reading it off. But the 5 times coin, the 5 times circle, the 5 times Google, the 5 times MSTR, the 5 times NVIDIA, the 5 times Palantir, the 5 times Tesla, 5 times Bitcoin, 5 times Ether, 5 times Solana, and 5 times Ripple. That's what they filed for. So that's fun. And you think, oh yeah, if my stock's up 20% this year, that means that stock will be up 100%, so I make way more money. But it's not exactly like that.
Yes, it is, Dennis. It's not. It's nirvana.
It tracks daily volatility. So that means on a single day, but there's adjustments and rebalances happening there, and they don't work perfectly. We've seen these with the double longs and the triple longs before, that they tend to lag because of a daily rebalancing that occurs. But one consideration is when you have a 5 times ETF and it tracks daily performance, that means if AMD has a 20% down day, like has a bad earnings report and goes down 20% of the earnings, this ETF goes to 0. Yes. So you could have an ETF going up for years and years and years, and it's just awesome. If AMD ever has a 20% down day, this ETF goes to 0. Do you think it's possible, just out of the realm of possibility, do you think it's possible that CRCL just possibly might have a 20% down day in it? Do you think it's possible? Well, if we look back to history here, have we had any 20% down days in Circle? We've had some 20% up days. There's some pretty big candles on this chart. I didn't actually go back and look, but I bet we've come damn close. I think when you look in history, you're going to find that some of these stocks have actually already had 20% down days. So when you are buying these 5 times long, if any day those stocks go down 20%, those 5 times ETFs go to 0. So maybe regulators, just maybe we should consider that maybe we should not approve these ETFs, because I feel like a lot of these stocks are these 5 times longs are almost guaranteed to go to 0, because in all likelihood, there's going to be a 20% down day for Circle one day. Probably for AMD even. They happen. Bad things happen to stocks sometimes. You have your single stock, goes down 20%, you buy the dip, you're good. You have your 5 times ETF, the single stock goes down 5 times or 20%, and your ETF's gone. You lose. 0. That's what's to consider, because you know what? When they approve the 5 timers, they're probably going to approve the 10 timers. And those 10 times ETFs will go to 0 if your stock goes down 10% a day. I feel like they're approving, and this is not approved yet, they just filed for approval, but I feel like if they come and approve stuff like this, they're almost guaranteeing that people lose money in the long run. Isn't the market supposed to be about long run, not short run performance? But yet we continue to come out with vehicles that are trading vehicles that are just geared up to short-term investors. And you know what? That's good. That's great. But I mean, long-term investors buy these things, and they don't know these things. They think it's done yearly, or I don't know what they think, but they're done daily. Lots to consider here, folks.
And,
but I do believe that there's a possibility, an outside possibility, that a stock like Circle could have a 20% down day.
What's the number one thing that we want our investors, traders, subscribers to take away from this conversation?
Those 3 times leveraged ETFs are dangerous.
Yes.
They're fun, but they're trading vehicles only, not investing vehicles. These are trading vehicles.
Flat, dumb, and happy. If you're messing with these things, fine. Intraday. I mean, we say this. I mean, of course, we got a lot of money. We all have a lot of money in the market, right? We can wake up the next morning, the market could be down 25%. And, you know, depending on, you know, the beta of your portfolio, you're going to be down. But these are trading vehicles. If you're good on your 15-minute charts, your 30-minute charts, your tick charts, go at them. Go at them. But SVXY, remember that one?
Yep.
I know more than a few people.
Was it SVXY? Was that the someone? It's back. It's back now, of course. But it was like the triple volatility. You know, I don't know, it was inverse or what. UVXY. Maybe it was UVXY.
No, UVXY. That's
I don't remember which one went under. There was one of them.
It was
they brought it back. Yeah, because it was like the triple. Do you guys remember this? If Chad, help us out. It was like the triple long volatility or something.
It was SVXY.
It was inverse volatility, and volatility went up 33% a day, and that thing went to 0.
Yes,
these happen. These moves happen. You got to know like these outlier moves, and these aren't even black swan events. A 20% stock move is kind of like. That happens all the time. We see 20% moves in stocks all the time. This isn't like black swan once in a 20-year move. So, I mean, these happen, man, especially in a stock like Circle, which is still new and liquid. This thing's wild. Crazy moves. That's my rant. If I was a regulator, I would say no to 5 times volatility, but I'm not a regulator, and they're probably going to say yes.
You are a CFA, though, that's helped write some regulations.
Well, no, I've advocated, and I have went on behalf of CFA Institute, and if I was still with, you know, on behalf of in the Capital Markets Policy Council, CFA Institute, I would have some major issues with 5 times ETFs being approved. But I'm not. I'm a trader, and we'll see what happens. I would bet they probably get approved because that's this market. Welcome to the Wild West. And that's what we're in right now. That's the rant.
That was great,
Josh. Let's go.
Clip it.
Clip it.
Great.
Get Josh out of bed.
Yeah. It's 6 o'clock in the
morning. Josh, you stay in bed. You're fine. He's not listening.
You're okay, Josh. You don't have to get out of bed yet. Okay. Yeah. So we do have other news here today. It's kind of an earnings day. We are into the midst of earnings season here now. It's some banks, Goldman Sachs yesterday. Today, we got a big one that's moving the entire market. It's ASML. Brentster, you're kicking around here. We're going to let you get those earnings. But obviously, we've got a chip rally, something fierce here this morning. ASML itself is up 4.64%. But we got NVIDIA ripping, AMD ripping, Intel ripping. Yeah, Intel's back. Micron ripping, Applied Materials ripping. Chips are ripping. SMH, if you just want to go there, up 2.66%. Hallelujah, amen. The bull market is back. Friday, completely forgotten. How did ASML do?
ASML mixed quarter, I would say 642 in earnings, beat the 636 estimate. So just a slight beat there. And then it looks like the sales missed under $8.8 billion, but the guidance looks strong. The Q4 net sales expected between 9.2 billion euros and 9.8 billion euros, expecting 51 to 53% gross margin. That was a little bit of a margin expansion. ASML shares up 4 or 5% here this morning.
Big pop. It was TVIX, just to finish the conversation. That was the vehicle. So we apologize to UVXY. We were trying to get them all. Like, did it come back? No, it was TVIX, Credit Suisse. Chintan letting us know TVIX. That was one that went to 0.
Think SVXY went under 2 one time.
I don't think it did. So we don't want to start bad rumors here. I don't think it did.
Something happened.
It was TVIX. I remember now. We were watching just jaw dropping on it. TVIX.
Carlton in the SCN chat also said SVXY. It was SVXY. So.
Okay, I don't remember that one, but I do remember the TVIX now that was said. So, okay, continuing on our conversation before we get ourselves into trouble. ASML. technical me, Joel, I mean, is this just the rally to gap and go, and semis are off to the races? We're not far from all-time highs on this stock. Talk to me in technical terms.
This is just so easy. I mean, you're pressing up against the highs of the pre-market session. I don't know if the all-time high is going to come into play yet. I would definitely check the expected move, because now the probably expected move is going to act as support on the upside as option traders scramble. But do you want to hold out for your October 7th high at 1044.85? That was a real bad day. That was a super bad day. I don't know what happened on that day, but it went from 1043 to 1002. So a lot of people are getting their money back. So I would use that right now. That would be a big target on the upside. Of course, keep an eye on your pre-market high, your open. There's going to be some kind of decline, some kind of sell-off in this $1,000 stock today. But the way things are looking, the top of yesterday's range, 993.48, looks like good support to me.
NVIDIA, new high, or well, not new highs, but bouncing back nicely. AMD bouncing back. A lot of your semis are bouncing back. Do a tactical on AMD for me, then we're going to move on to the banks. But, I'm being selfish here. It's one of the biggest positions in my long-term portfolio. Held on well yesterday. I was talking about stocks that did not want to go down. And the market was rolling over in the morning, and AMD's like, nope, not going down. Nope. But then at the end of the day, it started to get back a little bit here, but it's popping overnight here. What do we do with AMD? If you're a trader, I'm an investor, so I'm not selling, but what if you do? What if you're just trading AMD? What do you do?
Oh man, you want to see it over yesterday's high and you're right there right now. Actually, it's a combination of highs: 224.10 from Monday, 224.98 from Wednesday. You haven't poked over there yet. Above 225, have no idea where it's going, because your next daily high is 234.22. But I want to speak to you and the investors out there from a longer term perspective. And the big money was stepping up at 215 over that. I mean, and if you look at these stocks on a relative strength, look at Friday's low at 1320, right? You didn't get anywhere near that yesterday. You came within $2 of that. So for me, longer term, I would like to see the same pattern that you have here at 215 at 220. Like, build another base, build another area of support to launch off. Today, you're $5 away, looks pretty safe, but that's what I'm looking at. Are the buyers going to step up to 215 to 220 longer term here? And that actually happens to be mid-range of the entire move post whatever $1 trillion chip. And I can't remember, what was it again? AMD, they did a deal with OpenAI, right?
They did multiple deals, and it was Oracle too.
Yeah.
The big one was the OpenAI, but then there was an Oracle deal the other day as well for 50. It was yesterday, I believe. It was 50,000 AMD AI processors or something, AI chips. Yep. Okay.
Right, the highs.
I want to go back. I want to skip the banks for a second here. I'm going to come back to the banks. Don't worry.
You want to talk quantum.
But Brentster is still here, and we forgot to cover off the whole ag trade, because this was the trade last night, was this Trump tweet. I don't know if you have it, but you could show it if you do have it. Trump comes out, tweets with about 15 minutes to go in the day, and it harpoons the market again. So the Trump two-step kind of going on there as well. Talking about the farmers, talking about, I can't remember the tweet, but you're fine hunting it down.
Hold on, I get it.
So we saw the market sell off because he was talking about China and the farmers. Here it is. I believe that China purposefully not buying our soybeans and causing difficulty for our soybean farmers is an economically hostile act. We're considering terminating business with China having to do with cooking oil and other elements of trade as retribution. As an example, we can easily produce cooking oil ourselves. We don't need to purchase it from China. Interesting example. Okay, thank you, Trump. Buy sold off because a little bit of escalation there. We got a little bit of a trade war happening here. This is, even though it's just, specific, it sounds like to cooking oil, it's still escalatory. So escalating.
Yep.
Escalating equals algos equals sell. So we sold off.
Yes.
I didn't have anything more happen bad overnight, so of course they buy the dip. But you saw some significant moves in the ag stocks on this last night. Everybody goes to Archer Daniels. Midland right away. ADM blasted off from $60 to $61.85. Continues this morning, is up another $2.41. These smaller names, those Brentster, is what we were looking at, and you were bringing out Coot,
C-O-O-T, and
Australian oil seeds. Coot,
and I'm gonna type us out a little list in the chat, and we can go off of that. But Coot was going crazy. S dot is absolutely still going crazy. Sadat Group, SDOT, good old Seed, Origin, Agritech, SEED, BIOX, ABVE, AGRI, Edible also was going a little crazy. I haven't looked
Edible's
at this morning.
up 18% this morning. Edible, yeah.
One that I found that I don't know if we mentioned in STN last night was Cibus, CBUS. And again, I'm going to type all these in the chat. I'm doing that right now.
And then Jay Rice, great. Been with us for so long in our room here. Thanks, Jay. PFAI, Pinnacle Food Group, up 114% as well. So the algos went and combed the ditches for all the penny stock food egg stocks there and just started ripping them all higher. Like just ripping one after another, just going. Coot led the rally, though. We got to do the Coot because it was 96 cent stock. It's $4.20 here now. Obviously, if we're not buying oil from China, we must be going to go buy from Australia. Australian oil seeds holdings. That's what the market has assumed. Coot getting back the last 2 years of losses and now making new all-time highs, Coot. So literally from bliss or from piss to bliss, just like that. Bang. Coot up. Up 300%, 333%.
Man,
I don't know how the hell you trade stuff like that. I would say 5 is logical. Oh, it was to 5.
Yeah.
Okay, stop for a second. Write this down. When you have penny stocks, literally like 96 cent stocks, all of a sudden go up, they always usually run into resistance at $5. It's where securities become marginable. It's big. If there's options, sometimes there's options there. It's just big whole numbers, and $5 is the biggest of them all. So keep that in mind. If you're buying these stocks at 1, 2, 3, 4, at 450, it's 480. I'm like, oh, I got to buy it at 480. No, you don't actually, because usually 5 can act like a roadblock. 5 becomes major resistance. Can they break through it? Sure. You slam it a few times, and sometimes they can break through it. But when it's 5 just sitting there the first time, probably struggle. Second time, probably struggles. Third time, well, no such thing as a triple top. Probably break through it. Tried a couple times at 5, couldn't do it. Now it's peeling off. 5, major resistance. 4, Coot. I did the technicals for you.
Yeah. Okay. You guys are starting to grow on me.
Dun 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 dun.
He'll be here all day.
Joel Elconin, folks. He'll be here all weeks. And don't forget to tip your bartender. So I just want to say here, and this is like a awesome application in STN, and this is something that we do in STN. And we weren't prepared for this yesterday. I just want to say that. We put these watch lists together. And we like these moments happen, and we're like, oh my gosh, people are scrambling for these Australian seed companies that nobody ever trades before. And then they just cycle. They just go through one. Momentum goes into one, and then it goes, oh, there's another one. Oh, go into that one. So what we do is we make these watch lists. I had this watch list here ready to go for pre-market prep here this morning. And the next time, if there's ever a time, I think there's going to be a time that we have seed tech information, maybe from Trump, we're going to go to this watch list and we're going to be able to trade these things like right away. We're going to like, oh, Coot was the one last time, or ABVE was the one last time. Let's think about any trade that might happen there.
It's important. I think creating lists, and this is what I do too. And I mean, I got like lists of lists. Like mine are always sloppy, but I have lists, man. And that's what we try to do always, is have like groupings, because you can clearly see, like, I've always been a relationship-based trader. We know Coke, Pepsi, or Pears trade. I don't have to write that down. I'm going to write down KOPEP. But these other ones change all the time. Like this is new. Like, oh, we need all these penny stock egg plays. Like we need all these. Like, and we just keep going through. And I find these like small little AI names, or you find like they have to have all the quantum names, which we've done a long time ago. Those lists. But I mean, you got the drone names, you got the quantum names, You got, we're creating SPAC names here now, like going in different SPACs because the SPACs attack is back. Yes, it is. Shout out to Money Mitch and Chris and Catchy out there if he's listening. Catchy. SMG. You're going into one that I didn't
I was just thinking about
how it moves. It's not really.
No. I mean, I was just thinking about, fertilizer. But Dennis, don't look, Dennis. Do you was it Coot? Do you know how much it's traded this morning? Don't look. Don't look. Do you know how much volume this is traded?
Oh my gosh.
It's gonna be crazy.
It's gonna be crazy. It's gonna be like 20 mil or something. What is
more.
it? More than 20 mil?
Keep going, Brad. Keep guessing.
50 mil. 50 mil.
Keep going.
100 mil.
No, you're too high.
You're too high. Yeah. You got carried away.
83 million shares. This is $4 stock. But
I got carried away.
It's 8:26 in the morning. Maybe some of you people should actually sleep at night. This would have been tracked only from 4 a.m. too. Remember, anything before 4 a.m., that doesn't count in this volume. This is today's volume on exchange volume, which is from 4 a.m. So the midnight to 4 a.m. volume is not in there. It's volume.
Wow. That's insane.
Trade. Calm yourselves down. Sleep at night. Try sleep. It's okay.
Oh, here's the guy that's trading on Robinhood at 10 o'clock, right? Actually, some of your good trades could be at night when you're sleeping because you're not looking at it. You put in the orders to do it. It's unbelievable. I don't even know what to tell you with these stocks. I'll just broad stroke look at the pre-market high, 750. Also, if you're trading this to the long side or short side, baby, get ready for some halts. Get ready for some halts.
Oh, yeah. I don't know if they do. Like, it depends on some of these smaller stocks. They don't halt them as much. The rules are all written out, but they don't halt as much on the under $5 ones. There's different like levels here, and if the market cap's really small, they aren't as bad either. I think they should eliminate like the limit up, limit down altogether. Honestly, regulators, I know a few of you listen. You don't need limit up, limit down. You know why we know that? Because pre-market doesn't have limit up, limit down, and everything trades smoother. You don't need limit up, limit down. We don't need it anymore. I mean, now you got to come at me. What if we have a flash crash? Okay, well, we still have limits on the S&P, so we could keep those in place. But I don't know if we need all these small. And you want to keep it on like Amazon and Microsoft, sure, but we don't need them on these small stocks. We don't need limit up and limit down on Coot. We don't need them on the small stocks. So go out there, get your proposals, advocacy, professors, whoever's listening, and we don't need them. I'm telling you, I'm trading. We don't need them. They trade awesome pre-market, and they suck during the day when you get all these faults.
Do we care about any earnings?
Banks. Yeah, we went on a 10-minute tangent.
10-minute, Dennis. It's 8:28, man.
Of course we care about the banks. Financials. That's what drives the whole economy, doesn't it? It lends all the money until we all move to crypto. Bank America. Earnings. They were good. The Brentster's kicking around here. He's got those numbers for us. BAC earnings. How did they do?
They beat. Nobody's surprised. 106 versus 94 estimate sales, 28.24 billion. Analysts were looking for 27.5 billion. Just a note, as you probably can detect when we've been going over some of these banks don't really give guidance. So no guidance to speak of here.
It's a big pop, Joel. You're looking at this and saying resistance up here, big pop. Are you going to actually try to short a stock?
No.
No. Short.
What are you crazy?
Pour it off. You're throw it away. Except
for I was teeing you up for your dilution rant.
Dilution. What are we diluting?
We're still not even at the new all-time high yet in Bank America.
Oh, yeah. So we got resistance. All kinds of resistance.
Yeah, at 55.08. Maybe not today, but
maybe not tomorrow, but probably coming sometime in the future.
This could be
as long as it doesn't have a 20% down day.
This could be a fun one. This could be a fun one on the open, Triple D, because in relation, like, where is it gonna? You think it can open? I don't think it can open over 52.50. and
Can open wherever the hell it wants to open. 2.2 million shares have
What
already
it just
traded.
opened up?
Imbalance is nothing. 7,000 shares. No institutions even throw their orders out there this early in the morning here because they don't want to get.
But what about the book? What about the book? The people at 50 and a half that stopped it
Ain't
yesterday.
gonna be much in there.
People,
It's Bank America now. There might be some. I think we haven't had. I think 52. I'm gonna go $52 on the open even. That's what I'm calling for. $52. Just randomly guessing. We had no information.
It could be. It could.
Once it gets to 928, we can very much predict the open because it's close. I'll just go 52 for fun. As long as we don't get what can happen though, is they just say something in the conference call and they go, "Whoops, rug pull. Here's a 48 open for you." That can happen too.
And the reason we're discussing this, folks, is because we talk about order execution and things. So everyone in the book right now, if you had 100,000 to sell at 51 in Bank of America since last May, you're going to get done on this opening print. They have to fulfill all those sell orders at the same price at that opening print.
And you won't have that on the book since last May because the stock just traded up. That's more applies to when the stocks are making new all-time highs and they're getting or into high layer levels they haven't been doing the last 6 months. But Make America was at 51 last week. So that's going to be the hole in your thesis, Mr. Elconin. But there is sometimes
there's still 51 and a half, 52, 52, 52 and a half, 52.
I don't even know how many institutions throw their orders on the books anymore either. That's the other problem, is that they don't throw their orders out there. They use the nice little algorithm, sift it out nice and slow, iceberg this, iceberg that. Sometimes then Titanic comes in and hits that iceberg, but that's it. So I just think it's done so much differently there. That's why I don't know if I've said this, I actually got rid of my open book, my NYSE
You did?
open book. I did. Because there's hardly anything in the book anymore. I was like, I'm paying $60 a month for this. And I'm like, I don't know if I'm even getting any trades off it anymore. Years ago, we lived on the open book. We lived on it. I still have ARCA I still have NASDAQ Total View. But I got rid of the NYSE open book. One, because a lot of orders aren't on NYSE anymore. So it's only like 20% of the flow or less of the orders. So it's way less and you're only getting that. And I was just like, I'm just not seeing much on the books at all. So, I mean, the world's just changed since me and you were kids and you were sitting on the floor and I was sitting in the break trading office and saying, ooh, this NYSE open book, this is gold. And no, it's not gold anymore. If you guys use NYSE open book, let me know, but I got rid of it 2 years ago.
What about JV? I don't have my STN chat in. I wonder if he does it.
Have the open book, pay the $60 a month. Yeah. Things have changed. Let's go talk some economics here with our own Blu Putnam. He's ready in the background. What's up? Let's go.
Blu Putnam.
Good morning.
And former chief economist at the CME. I don't hear an echo. I thought I heard an echo before. Blu, you're not in jail, are you?
Trying out different backgrounds,
He's just another brick in the wall here.
Exactly. Hit a brick wall.
Okay, Blu.
Start with. Let's just start right off with what was Powell saying yesterday, because the markets rallied substantially here. It sounded a little bit dovish. Joel gave us some commentary from it earlier here, but what was your thought process as Powell was speaking?
He was just telling us that he's going to lower rates again in October 29. He also mentioned that they're going to stop the shrinking of the balance sheet. So
yeah,
that's not really a big deal, but it's symbolic that they're cutting rates because, when you're shrinking the balance sheet and cutting rates at the same time, it's a little weird. So they're going to end that process. There's still going to be a very big balance sheet. But we won't. It was just another symbol that, hey, we're in the cut rate mode.
Yep. And you said once they get going in one direction, they don't stop. But let's go. You did some homework for us. Let's get this up here. Let's rip through this, and then I'm sure our chat has some questions. Now, we were supposed to have some data today, but we don't have data. So here, make up your own data. You give us that CPI right now.
2.7 year over year. So here's the thing: if they don't, the September CPI is pretty important for a lot of millions and millions of Americans, because if you're retired and you get Social Security, this tells you what your raise is going to be. And delaying that number is probably a pretty unpopular thing to do. So anyway, they're going to bring some of the staff back. They're going to report it, I think, on the 24th of October. That's what they're scheduling. And then that'll allow the Social Security to send out their, what you're going to make in 2026. They usually do that, I think, around the early December. But they need this number. Anyway, 2.7 just says nothing's happening. We're stuck in this thing between 2.5 and 3. Maybe the month over month might even be slightly higher, but we're stuck in a range. You can see it on this picture. We've been there for a long time.
What about the different components of the CPI? Right, inflation of durable goods, discretionary goods, services. What do we need? Worry about or not worry about this? The durables, that looks like it's on an uptrend.
Oh, it's definitely on an uptrend. It was the part of the market that was most depressed coming out of the post-pandemic recovery. So anyway, it's making a comeback. But durables have, we're talking cars, we're talking appliances, things like that. They've been really hit with tariffs, and they've been right in the middle of all the tariff action. So they're coming back. The non-durables, the ones you've really got to worry about is, what are you going to buy your kids for Christmas? 80% or more of those goods come from China, and that whole negotiation is still in flux. We don't know what's going on. And then if you really want to bring interest rates down, you want to see service inflation come down. And service inflation is really all about rent and housing and things like that. And it is drifting down, but awfully slowly.
Okay, well, that's not a bad. So the big debate from the last meeting, was, okay, what are we going to do in the rest of 25? 1, 2, or 3? What are we going to do in 26? Looking at the Fed funds rate versus the PCE core, room or not to cut?
Well, there's definitely room to cut. The PCE core, like all the other inflation numbers, is stuck pretty close to 3, been there for a year. So I put 3 as the floor, and if anybody asked me, I wouldn't want to go all the way to the floor. But there's certainly room for a couple more cuts before you have to start arguing about where it gets a little potentially inflationary.
So what are you looking at? 1 more, 2 more, 25, and what's your outlook for 26?
Oh, I'm looking for a lot more cuts, but that has nothing to do with this picture. I think we're going to see some, more weakness in the economy, and that's going to scare the Federal Reserve, and they're going to cut a little more.
Okay,
let's go. 4 or 5 cuts for me as you get into 2026.
Jobs, or lack of jobs. I'll let you talk, and then I have my long-term thesis on jobs, and we can argue about that.
Well, it's kind of fun not to have the real data. You have to actually do some work. You have to look at the API a little differently, and then you got ADP, and then you got to look at different indices. But what we're seeing is that there's not a lot of firing going on except with the federal government, but there's definitely no hiring going on. So we're in a very uneasy, unusual balance here that is probably not indicative of a healthy job market. So I'm in the camp that this stays pretty weak.
I mean, this looks tough. When you look at this, you're like, steady as she goes. We're getting some spikes. Like now it's like, obviously August, I guess you're looking at, negative here. I mean, this actually stands out like a sore thumb where you've circled this here. This is concerning to me. So, I mean, is this like the Fed? This is the real reason like that they're lowering rates is right here, this little circle?
It is. And here's the deal. the Fed has a dual mandate, full employment and price stability, but they're not equal. And the reason they're not equal is that most FOMC members believe that if the job market is weak and the economy is weak, you're not going to get inflation pressure. So the jobs number is, it's not 50-50. It's more like 80-20. And so that little circle there is pretty important. We don't have any new information from the government, but we've got plenty of information on the private sector side that there's been no real improvement in the jobs. And of course, this particular government shutdown is different because some people are getting laid off permanently. And, it's not a large number of people, but if you're one of those, you're not very happy. And if you're concentrated in areas that have a lot of federal workers, your market's going to suffer. So, it's a negative.
And it's hard to ignore that this trend has been instigated by the tariffs, right? So if we're going to continue to have tariffs, is it just going to exacerbate this chart that we're looking at?
Yes, it's no accident of when those last 4 months occurred. Companies have really tried to be resilient with the tariffs. Companies have eaten a lot more of the costs than I certainly thought they would. But they've done that. They want to maintain market share. But the other problem they have is the consumer's pulling back, not total spending, but being much more careful about how they spend. So they're going to buy the generic brand instead of the name brand. They may hold off on the car purchase, things like that. So, companies are worried. And of course, they can't really invest in expanding plant and equipment and until they know what's going on. And we don't know what's going on. And we're not going to know what's going on until we have a deal with China. I mean, China is just so big. The U.S. is so big in the world. Until these two countries come to some deal, it's going to be highly uncertain. By the way, you can see it in two very interesting places. Since we have no government data, we have to look at other data. One of my favorite indicators is cardboard boxes. If they're not like a ton of cardboard boxes in your basement, if you're in an apartment building or, whatever you do with your garbage, if they're not a ton of cardboard boxes, you should go out and sell everything because cardboard moves goods. So the cardboard index is down. The other index that's kind of interesting to look at is just shipping, what it costs to ship things across the ocean because, most goods do get on a ship at some point. And those rates are down too. So container rates, things like that. So we have a lot of alternative measures that tell us things are, they're not falling off a cliff. They're just not going in the right direction.
Brett will have a cardboard box list of stocks after we come back from the break. I don't think Georgia Pacific is around anymore. But real quick, before we move on to the Taylor rule, what would you say to somebody that the labor market is permanently shifting, right? AI, besides everything else is going, AI is taking jobs. They are replacing people. So using the unemployment rate, isn't there have to be a stepped up benchmark? Because it's I don't care if you cut a quarter. I don't care if you cut a half or 3/4 or a full point like Trump wants to do tomorrow. Jobs are being lost to AI. Are we going to have to change our levels of appreciation, not appreciation of our standard level of unemployment? 5.5, 6. Maybe that's just the way it's going to be.
I'm not quite that negative, but I get what you're saying. A lot of companies, including some big Wall Street companies, are, advertising, we're going to cut a couple of thousand jobs and we're saving money with AI. That's not the reason they're cutting those jobs. They've been looking for a reason, and AI just showed up. But AI is going to make some companies a little more efficient. The biggest use of AI that is already very effective is coding. You make a little mistake in coding, you give it to one of the AI platforms, it says very politely, oh, I see the error, and it gives you the corrected code. This stuff is amazing. And then you do get some ability to use large language models to track different trends in the economy and so forth. So there'll be uses. But AI is not killing all those jobs yet. Now, we're going to build a zillion huge data centers. The interesting thing is, of course, anybody that's lost his job from AI is probably not working in data center construction. But we're going to hire a ton of people to build these data centers. But once they're built, they don't employ that many people. So we're on a roller coaster on jobs, but I'm not blaming AI yet for a massive amount of job losses.
Okay. Good. I'd like to counterpoint there. Okay, let's talk about the Chuck Taylor rule here for the Fed funds rate compared to the actual Fed funds rate.
Well,
You've been talking about the Taylor rule for a long time, Blu.
Well, the Taylor rule is a 50-50 rule. Unemployment and inflation get equal weight. I've already explained that no, they don't. But and that's just, because higher unemployment, most people think inflation is going to go down. So, but the Taylor rule has been suggesting that we should have been cutting rates for a long time. And it's not a bad advisory service. Like I wouldn't want the Fed to adopt the Taylor rule as their rule. But if the Taylor rule says you should cut, you probably should be thinking about it. And the Fed was very, very late in that because they were worried about tariffs. Well, they were worried that inflation, they got the transitory stuff wrong. Then they finally cut. Then they started worrying about tariffs and stopped cutting. So there's definitely some room to cut on a quantitative basis. And if you look really closely here, you would see that they could cut to about 325 to 350, which is a little bit above the 3% inflation rate that we're seeing.
Okay, equity, risk, reward, risk return distribution based on open interest as of September 10th, my sister's birthday. You have talked about this in the past. Where's the skew here?
The skew is still to the downside. This is about a month old, but it hasn't really changed very much. There's a preponderance of activity on the put side of the market. We don't know this is not a forecast because there's a buyer and a seller for every one of these options. So if you're worried about the market going down and you buy a put, fine, but somebody sold you that put and they took the premium in. So we have a two-way market here, but what pictures like this tell you is that it's the downside that people are worried about. So the interesting thing is that means the market has climbed a wall of worry. And you can climb a wall of worry when you're worried about almost everything and then nothing bad happens. Then it goes up. I feel like, my own view is we're probably at the place where something not so good might happen. And that wall of worry is getting a little toppy.
What about like a new chair? Let's just go back to the Fed and say Powell is going to be out. We know that. Next chair is probably going to be somebody who Trump appoints, who's probably going to be more dovish than hawkish. Is there a scenario where this Fed could get too easy on money? We start leading into, and you've worried about stagflation to a certain extent, but just inflation coming back hard because easy money is everywhere. And I mean, the wealth effect as well could drive inflation too, because you've got stocks near all-time highs, crypto's exploded. I mean, there's money being made in the market everywhere. Thoughts just on in 2026, like projecting out past Powell?
Well, I do think we'll get a low interest rate Fed chairman. So your thesis that we might get a extra low on rates, I think holds a lot of water. I'm not too worried about stagflation and the inflation coming back because I do think, in my own view, the economy is going to be a little weaker. So, we don't necessarily get the inflation right away, but I can tell you where you see it, and you hinted at it. You're looking at alternatives to the dollar. The dollar is going to be the canary in the coal mine. Now, the dollar, if you're thinking about, hey, maybe I'll buy some euros. Well, wait a minute. There's a whole big crisis in France, and it's a really big country over there. They've had like 4 prime ministers in a couple of months. Well, 5 if you count one twice. And, it's just not a good scene. So the euro is not a particularly great option here. Then you go to Japan and wait a minute, they got a new prime minister and she's all for more stimulus. So that's it for the Japanese yen rally. So what do? Hey, you buy Bitcoin and gold.
Well, they're certainly doing that. We've been on the line with Blu Putnam, consultant, former chief economist at my old stomping grounds, the CME. Blu, unbelievable presentation. As always, well prepared. Will the government be open next month, or are you going to have to do another long PowerPoint like that?
Wow. That one's completely 50-50, but the record for the shutdown is 35 days. That was set under the last President Trump's first term. This one looks like it could set a new record. But the pain to the economy is larger this time because they're not just furloughing workers, they're laying off workers. They're threatening not to pay some workers. This will hit the economy harder. It'll hit the economy sooner, and then somebody will say, look, let's just sit down and talk. So I don't know who blinks, but I do think we're going to make it into November, but then we'll get a solution.
Okay, Blu. Thank you. Great content as always, and be dialing you up next month.
Thanks, Blu. Joel, you're chopping up a little bit here.
Really?
I'm gonna bring the Brentster in, and maybe you can just reboot your computer or something. You were losing. You're coming in and out. So me and Brentster are gonna take the reins here for a minute while you figure out. Well, actually, you're okay now. Let's try now. Maybe you're okay now.
Well, I did have the double StreamYard going.
I think that did it. You're good
maybe.
now.
Yeah, because but it was on different computers.
It screwed it up. I think
it could have screwed
Well,
it up.
You sound fine now.
Brent,
okay, well, we're running with the regular scheduled program. You sound pretty good now here. So I think
Brent, you did get to help me with my layout and stuff when you came over on Saturday for Lobster Tails.
Yeah, I know.
Yeah,
I didn't get invited for Lobster Tails.
Yeah. Brent, now
I eat lobster.
Yeah, and you know what? BB did not bark at Brent at all.
BB
likes maybe once when we walked up to the door, but we're friends, we're buddies. Al and I were like, BB's so cute. We wanted to play with BB more. Yeah.
All right.
I do have a
digression.
I do have a little bit of breaking news. The U.S. Trade Representative proposal modification of Section 301 action over China's targeting of maritime logistics and shipbuilding sectors. This is coming from the Federal Register. I'm kind of quickly looking around to see if there's any overseas shippers that started reacting to it. I don't really think so. Carmen was saying that OMER was moving. I don't know if that's it. I
don't know what that is.
Yeah, it might not be related.
It just doubled. I mean, no big deal.
No, this is a biofarm. This is a biofarm company. Sorry, I was thinking of OMEX, that deep sea mining company.
Odyssey Marine Exploration. Well, that one's moving too.
Yeah.
This is the bull market. You bring up the wrong ticker symbol, it's going up. You bring up the right ticker symbol, it's going up too.
Oh my gosh.
Welcome to the bull market where everything just goes up.
Awesome. So what was I supposed to bring up?
OMEX.
Totally unrelated.
That goes as well. Everything just goes up. Why not? Why not? So that one's moving too. Keep an eye on that. The Brentsters saying
like a ESEA Euroseas, that's a ship company. It's super thinly traded. I don't know if it would trade on that, but it's not moving here or anything like that.
Remember the old dry ships?
I was just gonna say that.
Yeah.
Not off the board, I guess, worthless. DRYS. That was the one that everybody traded back 10 years ago, probably 10 or 15 years
Wasn't
ago.
it guaranteed money? Didn't Jeff have
guaranteed on the short side? Short. Yeah, crazy.
Okay.
Interesting stocks we've had over the years here. Okay, so we had a bunch of news happen while Blu was on, and then before that as well. Hims and Hers to offer treatments for menopause and perimenopause. Dow Jones is reporting this. Hims is getting a pop on this, up 3.46%. It's a stock we haven't talked about for a while, and it's been in consolidation station. Is this a catalyst? Is this something that could kickstart Hims? Because Hims and Hers has just kind of had a whimper lately. Hasn't participated in the rally. Way off the August highs. When's this old former Momo name start get going again, Joel?
When it breaks above $60, it's just been a big wall there. I will put up a horizontal line, and it's nowhere near that right now, trading at 56.92. You've just had it just hasn't been in the news. There hasn't been a major catalyst. Usually when this thing gets hit like $5, $6, $7, $8, it bounces back. But right there, man, at 60, and you've had a nice trading range here. You're just above the 50, so you're holding that 50. You're looking good to go. But someone a big player, bigger than me and you, wants to sell at 60. And the orders, I know you're not looking at the book, Dennis, but the orders are coming into the book here. The limit sellers are coming in here, and now we are sub 52. So don't even 52. That was your call. I don't even know if we're going to open at 52. But you know what? If they take this thing a little bit lower, like 51 quarter, 51 and a half, this could actually be a buy off the open.
We will see. I'm not so sure about that. Hillenbrand to be acquired by Lone Star Funds for $32 per share. Believe in cash. Yes, all cash. That's symbol HI. Stock trading up at 31.46 was halted for the news. Is out of the halt here now. Did somebody pay 35? Oh, that was last night. They paid $35. Yeah, I saw that thing ripping last night on the rumor. So you got to watch buying these rumors here, because sometimes these things way overshoot even on the rumors. I just ripped last night, like right around like a minute or two before the 8 o'clock close. HI just exploded higher, and it was rumors, and went up to $35.99, I think. So somebody way overpaid for that. Stock back down 31.46. So this story's over too. And then there was also another takeover here, which just got announced as well. TrueCar, TRUE, to be acquired by founder Scott Painter. So I guess he's done with his stock going down, and he's come in himself to buy the company, buying the whole thing for $2.55 in cash. It is currently halted here. TrueCar, truly valuable for those people who bought yesterday at $1.48.
What's the symbol on that one?
TRUE. It's a good trick.
Man, you guys, is this obscure symbol Wednesday? I mean, you guys are you come with your shipping stuff. Brett, do you have our cardboard box list yet? What would that be?
Get the cardboard box list. We're gonna look at the cardboard boxes.
Georgia Pacific. I remember trading that thing at Oldie. That thing was wild back in the day. What did that get taken over? A long time ago.
Joel, you're going back to the 1960s.
No. I was barely born in the 60s. Okay.
Really? I thought you were born in the 30s.
Yeah, that stock market crash was wicked. Got the dip. Oh man,
it's Joel's fault. The 29 crash was Joel's fault.
Yeah, it's so far to find your cost basis from the 29 crash. I mean, I have to go. You should see the stack
bought and hold back in
the statements that I got. Just going through those statements, it just takes so long to get the little slips. You purchased so and so.
Yeah. Okay, minute left here. We're going to continue the conversation over at Stock Trade Network. Give you a little look at imbalances here. Oracle's about to buy imbalance. Feel like every morning. 88,000 shares to buy. It's up today. It's an AI type of day after ASML earnings there. It's trading up 5 points here in the pre-market. 88,000 shares to buy. Bank of America 74,000 shares to buy. So we do have a buy and balance on that stock now. SMR 153,000 to buy. Oklo 97,000 to buy. We got a nuclear type of day happening here this morning again. And that's what we got so far. 925 NASDAQ imbalances come out. We cover those live over on the Stock Trader Network. And we will be making some trades over there. So come join us. STM.
And you know who's joining us today after a month hiatus?
Who?
Mark Chaikin.
Chaikin's coming in.
Yeah, yep. Chaikin's coming in. We had the wonderful
doing some bacon with Mark Chaikin.
Yep. The wonderful Anne Marie Band was on yesterday. So
awesome.
Yep. All right, folks. All right, let's get over this Wednesday. Keep an eye on your pre-market high, and let's see if Bank America can open over $52. Thanks for joining.